All right, welcome into Market Report. I'm Scott Shellady, otherwise known as the Cow Guy. All right, let's take a look at the prices. That's what you want to see. I get it, though. Let's go right in and see what we've got going on in corn. Let's bring that big old table up behind my big old head. Look at that. Nice and shiny, too. My May's down 5 cents to 6.52 3/4. July's down 8 cents to 6.29 even. We've bunched off the lows a little bit there still, but we've got between, say, a nickel and 8 cent loss across the board. Let's go out to the new crop, Dees. 5.61 1/4 is last there. The low 5.59, so we're about 2 1/4 cents off the lows. That's down 6 1/4 on the day. So giving back some real estate, kind of letting the air out of it here today a little bit. Soybeans for sure have been doing that. Maize down 11 3/4 cents to 15.10 1/4, about 5 cents off the lows. Let's go out to Novi New Crop. We're well above 13 still, but we've given back 13 3/4 cents to 13.19, and that's about 5 cents from the lows out there. How about wheat? What do we have happening in the wheat? Just a little bit better in Chicago wheat. Maize up 1.5 cents to 6.95 in the middle of the day's range, maybe towards the upper end, I suppose. But only about three tick rally in July. That's 3/4 cent to 707.5, and Dees is up just 1 tick, 1/4 cent to 738.5. Let's see what we've got going on in Kansas City. Kansas City, that's the old hard red. That's up 4 3/4 in the May. That's 8.80 even is last there. About 8 cents, kind of in the middle of the day's range. We're 2 cents higher in the Dees to 8.59.5, and about 7 cents off the lows there. Let's take a look at spring wheat, Minneapolis. What's that got going for us here? Well, May's up 2 cents, 8.93 3/4 is last there. In the middle, well, maybe towards the lower end of the range there. Spring wheat Dees in Minneapolis, 2 cents higher in the 8.95 is last in the Dees. There you go. All right, and then moving over to see what cotton's got in store for us. At 80 line is held, 80 cents is held. We're 174 points lower in the May to 80.64. The low is 80.22. And that's a good segue to bringing in our next guest analyst. It's Tommy Grisafi from Advanced Trading in Valparaiso, Indiana. Thanks for being on the show, Tommy. All right. What are your thoughts here? We're kind of taking the air out of it a little bit.
We are. And something happened yesterday afternoon. I trade oats because, as you know, the oat pit with Mr. Jay Homan at the Board of Trade, where I stood in the corn pit, my back was always to the oat pit. And there was Jay Homan and, if you remember, 3 locals. So 1 broker forever and 3 locals. But when the markets were screaming up yesterday, oats were collapsing, and oats collapsed again today. And sometimes us old guys, you included, we say oats no. And I don't know why oats went down yesterday, but when oats go down, I pay a little bit of attention. I guess my advice for everyone out there watching in ag land would be, you want to buy crude oil, but don't buy your crude oil in the corn pit, kid, as they say. And it did have a huge effect. I mean, when you come in on a Sunday night and crude oil's up 7 to 10%, it's going to have an effect on the commodity market. I guess the question, I'll toss one back to you. I get tired of you asking me questions. I'm going to ask you one. Why the heck is gold up $50 an ounce? Back to you, my friend.
Well, I mean, gold's up like the treasuries are up. Treasuries up, yields are down. Folks just don't know where to put their money right now, and that's what we're, they're at. And gold's expected to make even bigger gains this year. So, I think in a world where we've got wobbly banks, we're not quite sure we're going to see inflation rear its ugly head again. Gold could be the old-fashioned inflation hedge. I think that's why it's going up, and I know that because people are now getting out of the stock market and buying bonds. I think that's also why you've seen the bonds go up as much as they have, and the yields have come down again today. So we're well below 3.5. So again, that's people rushing towards safety. Buy U.S. Treasuries, bond prices go up, yields go down, and they're also buying gold. That's why I think you've got the situation where gold's really put on them all. Probably $300, right? We were down around 1,600, 1,700. So I think that's a telling tale about where we're at right now, especially with the banks. All right. They just told me I got to go.
You did great on that. Let's take a little break, pay for some advertisement. We'll get right back.
That's awesome, Tommy. All right, we're going to take a break. We'll be right back after this. All right, welcome back. Let's jump right in. There's no wasting any time because you don't need to hear me talk. You just want to see the prices. I don't blame you. Let's take a look at live cattle. Let's go to the proteins. Live cattle in Chicago, what's that got for us today? Well, we're just a little bit easier. April's off 15 cents to 167.97. That's 10 cents off the lows, though. Let's go out the deferreds all the way to Dees and see what we've got going on out there. 45 cents lower there. 169.67, 17 cents off the lows in Dees. All right, feeder cattle. What's any up arrows there? A couple of them. It's kind of schizophrenic. 22 cents lower in April. 198.72 is last there. And then we've got an up arrow right behind it in the May. Just 3 ticks, though, 7 cents. And that's going to be 203.22 as we have now 4 contracts with a 2 in front of it, and waiting for April to make that move as well. Let's see about lean hogs. We'll get back to Mr. Grisafi. Lean hogs taking it on the chin in the front. April's down $2.05. Ouch. 72.47's last there. About 30 cents off the lows, and we've got May down $1.25 to 83.12. Let's bring back in Tommy Grisafi, Ag Market. I know he's Advance. Thanks for being on.
What are you going to say, agmarket.net? Did you know I got a new job? What's going on?
Yeah, no, there's
Hey,
everybody would love to have you work.
Those guys, great guys, but they can't have all the customers. I'm glad they left me a few. That's great. Seriously, agriculture products are all over the place. And I was dead serious when I asked you, why is gold up $50 an ounce? And you're seeing things like, we'll talk natural gas. And why are we talking about natural gas during the meat segment? Because it's a commodity. And when it has its worst quarter in history, you got to scratch your head. What does the worst quarter in history look like for hogs, cattle, feeder? Now, they have such bullish fundamentals. But with those bullish fundamentals, live cattle and feeder cattle started off having a great day, and everyone knows this horrible storm is going to hit the farmers in the upper Midwest and Canada and everything else. And hats off to all those people who are going to, during calving season, have to deal with this. But that's the reality of raising animal livestock, is it's a tough business. Bigger problem is, why are these hogs going down every day, every week? They're in an area that's just horrible to make money. I mean, if you're raising hogs, you can't store them. You can't store cattle. So when you see cattle up 200, still don't be afraid to sell them. These markets are sellable. Commodity markets are one of the coolest things in the world that you can short as a speculator. As someone who's actually producing the good, you have to be using the tools of the market. Back to you, my friend. Don't be afraid to be ahead.
I agree. Don't be afraid. You're right. No, and there are a lot of tools, and the CME's got some great ones, and options are included in that as well. So I appreciate you making that point. It's a good one for get that risk down on paper. That's what you're probably trying to say too. Appreciate you coming on, Tommy Grisafi, Advanced Trading, which is a big partner of the Cow Guy Close. We want to make sure we get that out there. Thanks, Tommy. And we'll bring it back here to you, Tammy. And
all right, thanks for the update. Lots of good stuff there.